Hello and welcome to this Devonomics video on Ghana's economy. This is a great case study on a developing economy, and we'll look through their particular crisis they had in recent years, some of the development factors and what they're doing to try and improve development over time. So yes, this is a case study on a developing economy, so you can use this on any essays that require developing economies. Like many developing economies, very much primary product dependent, rely on those natural resources, gold, oil, cocoa, for their main exports. As we'll see towards the end of the PowerPoint, they're moving towards a more market-oriented economy since the 1990s as a way of trying to boost their growth and development. But as I say, this economic crisis they had in 2022-23 is one of the challenges even fast-growing developing economies can face. So let's start with that crisis. So in 22-23, a massive increase in inflation. Now, this is obviously the time of the cost of living crisis in the UK, but you can see inflation here surged by 40%. The currency depreciated, import costs rose dramatically. At the same time, the public debt exceeded 100% of GDP, debt service taking on most of the government revenue. It was unsustainable. This is partly down to economic mismanagement, a lot of extra spending into the economy, which, to be fair, is a good way to try and develop countries, but got in too much debt, and then we had the COVID-19 followed by the Ukraine war. Those double shocks triggered this instability and loss of investor confidence. So a big issue faced by Ghana's economy. And you can see that here, right? So Ghana actually was one of the strong growing African nations before the pandemic, growing above 6%. But obviously, like most countries, big dramatic fall during the economic crisis or during the pandemic. And then you can see again during 22-23 that growth slowed down to nearer 2%. Now the unemployment figures down here, these are the official figures I found from Trade Economics, and they're actually still quite low despite the fact that these growth crises and the pandemic. Is it potentially because of high underemployment? People potentially just took lower skilled jobs, a lower pay rather than losing their job, but also a significant amount of jobs done in the informal sector where it won't be officially counted. Another statistic I found through a BBC article from Ghana's statistical agency estimated unemployment at 14.7%, so a massive difference. And that's probably a very much broader measure of unemployment, maybe including some of that informal sector. Okay, and then you can see here, this is obviously the sharp rise in inflation that we saw and the big peak during their economic crisis, that import cost shock, depreciation of the currency, boosting import prices, along with fuel and food price surges. A terrible situation in a developing economy for that to be happening. Think of the cost of living when in fact development has not yet been fully achieved. Therefore, inevitably, there was a rise in interest rates to try and stabilise inflation, and that was done. I think the inflation did come down and has come down more recently. So the crisis also, you saw this big increase in national debt, and therefore up to 83% there. Again, some different statistics depending on what sort of debt figures you're looking at, but significant fiscal expansion, pandemic support and weaker tax revenue led to that massive spike in national debt. And then more recently, fiscal consolidation, meaning trying to reduce spending, increase taxation, and debt restructuring allowed that to be reduced. And in terms of these other macroeconomic objectives, we saw a current account deficit in Ghana persistently, linked to quite high imports of fuel and machinery and limited exports and large debt payments abroad. But that surplus in recent years has been sort of sparked by improved earnings for oil, gold and cocoa. Big, massive increase in the gold price and also reduction in imports. So they've actually got a bit of a changing situation in the current account. In terms of the Gini coefficient, you can see that it's risen from 0.36 to 0.43, indicating high and worsening inequality. This is mainly due to the development of the economy in some ways, benefiting urban areas, high income groups, rather than those who remain in low paid informal work, as we discussed previously. Now here's some statistics from the Tutor to You country comparisons. So I picked out some of the key ones here for Ghana, Vietnam and China. It's a great resource, a Tutor to You comparison, so you can put in several different economies and compare them. So we see here Ghana compared to Vietnam and China, so it's sort of a lower GNI per capita PPP dollars, but it's increasing. Human Development Index a bit lower, And you can see those three figures are life expectancy, mean years of schooling, expected years of schooling, all to do with the Human Development Index. Debt, significantly high. Median age, quite young. We'll see that can be a pro and a con in a minute. And that population growth. So sort of young, growing population and quite large gaps in terms of gender equality. So in terms of the Human Development Index, we've seen that has increased over time. So Ghana is developing and improving that over time. And it's come through more that strong economic growth we saw, investment in health education to try and boost their broader development for HDI. Now, as you'd imagine, that crisis in 2022 did do damage to people's real incomes, their access to healthcare, their living standards, the GNI per capita, life expectancy. So all those things did take a bit of a hit there. But it has been recovered since, as the economy stabilised, better public services and income growth returned. So, but that's a big blip really in terms of that crisis, showing that real hit to living standards that the crisis gave. But the long-term trend has increased human development. I'll move on to some of the factors that affect development. So, as I said earlier, a primary product dependent country, 70% of their exports really from primary products. At least that amount, you can see from the chart, the there is up. And then some key stats. Ghana is the second largest cocoa producer in the world. 40 to 50% of export earnings come from gold. It's one of Africa's largest gold producers, and oil itself also 10% of GDP. So quite a big impact in terms of these primary dependents. And there you can see the classic volatility. So this volatility of cocoa prices, and therefore this has been partly due to changes in climate, disease, and just instabilities in global markets in general, creates great uncertainty for farmers. In some ways, that's why they put in a buffer stock scheme in Ghana, as we'll see later. But gold, actually, having a variety of commodities, does at least diversify them beyond just cocoa. And we've seen a big, strong increase in the gold price, has boosted export earnings, and potentially that's why they went to current account surplus, as I said earlier. But big issues with that gold price. We're seeing a lot of land being lost from cocoa production, affecting farming incomes, pollution, and I say future agricultural output is reduced. So there's an opportunity cost there of them investing into the gold industry and gold mining in particular, including the negative externalities. Now, as I say, because they're prime product dependent, they haven't really got to great industrialisation. And one of the reasons that's the case is due to the savings gap in Ghana. You can see the Harrod-Domar model here, and savings rate of Ghana is around 11%, which is below the 20-25% needed to really sustain industrialisation and investment. So there's been weak domestic investment, and therefore have been limited amounts of cocoa processing into final chocolate, for example, and mainly staying in the primary sector. In contrast, Vietnam saw high savings, and therefore more investment, more capital, more growth, more incomes, and more savings, and it becomes self-sustaining. So from Ghana's point of view, a lot of their investment is therefore financed through aid and borrowing, increasing their debt dependence, and again, maybe a reason why they're more susceptible to higher debt. And here are some issues they've had. So we've talked about this, the high public debt, the opportunity cost of debt, that instability and high inflation hitting living standards, especially in 2022. Infrastructure, so roads, power outages. This affects the efficiency and productivity of industries, but also living standards of people in general. There have been some concerns about corruption and whether funds have been directed correctly. As you saw earlier, also rapid growing population, 2% a year, and that means more young dependents to look out for, GDP per capita being lower, and a large informal sector, as we saw. So again, maybe productivity being lower in those sectors. But they also face shocks through non-economic factors like drought and flooding, but also external shocks such as the global energy crisis and COVID-19. On a positive side, you'd hope to see that young population grow up into a stronger workforce, a demographic dividend in future years, along with their decent outcomes in terms of state education. This could be a cause for optimism in terms of future economic growth and development. Now, in terms of their support, so as following from this crisis they had, the IMF support came in and gave them short-term assistance during the crisis. That $3 billion IMF programme to help support them during the crisis. Strengthen their currency reserves, trying to stabilise the currency, help them meet debt payments and central government spending because they were getting to unsustainable levels. One of the things about IMF support as a strategy for helping Ghana in terms of development is the conditions attached, often very free market, could involve austerity, spending cuts, tax rises, and therefore potentially more slower growth and short-term hardship in terms of trying to get that support, with some downsides for the economy. But I think given the scale of the crisis, IMF support was hugely essential for Ghana. And debt relief as well. So it's interesting they've had debt relief in the past. So in the 2000s, HIPC initiative was a major debt cancellation scheme. But since then, as we've seen, debt has come back. There's potentially this moral hazard where debt forgiveness gives the impression potentially that if future debt crises occur, there'll be more debt relief, more IMF support, and so therefore governments feel that the risk of their spending could go on to other people, e.g. debtors and the IMF. So in 2022, Ghana has restructured domestic and external debt. Bondholders taking some losses, extended repayments potentially, alongside the IMF support. Now, that does reduce your short-term debt burden and reduce the chance of defaults, which they don't really want to do in terms of the reputation, but it still leads to the credit rating falling and borrowing costs remaining high. And that figure there, that 2.8 billion of debt relief was agreed with creditor nations. That's quite a good stat about the debt relief. But that debt relief versus getting into future debt and that sort of cycle of debt, potentially an issue for Ghana's economy. Foreign aid, as I said, another way in which they plug the savings gap. We're seeing some stats here about how it's helped improve school enrolment. We said they're particularly good in the primary state schools, 85% improving their literacy and skills, but also the vaccination. So over 90% vaccination rates and cut malaria deaths by over 50%. So those health and education outcomes, potentially that's why that HDI is rising. They're two key elements of HDI. But there is a risk of dependence, and the US under Trump have been looking to cut aid, and therefore a shortfall, especially in healthcare, has led a country like Ghana, who's dependent on aid, potentially to have some shortfalls and less be able to spend as much. There's actually been talk in recent years about Ghana trying to aim to go beyond aid as part of their development strategy, to reduce dependence on foreign funding, achieve more self-sustaining growth. I think that links back to that Haradoma model, like if they can get that saving, investment, industrialization, generating that income for the country and growth can be self-sustaining, reduce that need for foreign aid in future. So that is a good long-term aim of aid, but obviously it has given them quite a lot of benefits in terms of how it's helped them improve their education and health outcomes. Finally, just think about their interventionist versus market-orientated strategies. So traditionally have been quite interventionist, that state-funded education system, managing the exchange rate and the buffer stock scheme to try and stabilise cocoa prices. But since the 1980s, they have shifted a bit more towards free market policies, more trade liberalisation, currency FDI and privatisation, trying to get those benefits, economic efficiency and growth over time to try and help development in the economy. So it's still a mixed economy, and there's still key sectors they're intervening in terms of the currency, cocoa and education and those sort of things, but it has moved towards a more market-orientated strategy. Okay, hope that gives you a good overview of Ghana's economy, and we'll leave it there.